welcome to Bloomberg Quint Live. I'm Alex Matthew. Well, it's been an extremely volatile day of trade and there's lots that's happened. So what did you miss? Let's get straight to the headlines. Indian equity benchmarks halted a 4-day losing streak in a volatile session with gains led by TCS and ITC. Corporate health tracker by Credit Suisse shows the debt burden of companies that have low interest coverage ratios has increased over the last quarter. Former Deputy Governor H.R. Khan recommends that the Reserve Bank of India undertake an operational risk audit of Indian banks to protect the system against frauds. And film star Kamal Haasan makes his political foray, holds a massive rally in Madurai. Let's first turn to the Indian equity markets, and the Indian equity benchmarks halted a 4-day losing streak and closed higher for only the 4th time this month. Agam Vakil is standing by to take us through all the action that took place on Dalal Street today, and a lot of action there was. Volatility was the name of the game, wasn't it, Agam?
Sure, Alex. We did see some very sharp moves with respect to the benchmark indices. However, this is largely within a range. So starting off with the Nifty and the Sensex, as you can see, we did see them come and close in the green by as much as 0.4%. But in the broader markets, when you consider something like the mid-cap index or the small-cap index, they underperformed the benchmarks. So the mid-cap index up as much as 0.2%, small caps ended by as much as 0.3% in the red. What we're also looking at is a substantial amount of traction in the information technology sector, following stocks like HCL Technologies as well as TCS, along with several others gaining in today's day of trade, and that's the reason why some of those benchmarks were buoyant. But we are looking at some weakness in the pharmaceutical sector or the metal sector for that matter. And of course, a large amount of this weakness was on account of Sun Pharma, which was the reason behind the weakness in the pharma index, and Hindalco moving down by as much as 3.3%, that bear down on the metal index. However, in the broader markets, we did see a lot of gainers, and two of them included Schneider Electric as well as L&T Technologies, which is the engineering services company. So on the whole, it was a fairly mixed day of trade. We did see plenty of action, but very quiet cues when it comes to the benchmarks, and that should lead us into our trade tomorrow as well.
Absolutely. Thanks so much for that, Agam. Now, let's move on to a special report here. Even as the overall earnings picture improves for corporate India, stressed companies continue to buckle under their debt burdens. The latest corporate health tracker from Credit Suisse indicates that companies that have a low interest coverage ratios have actually seen their debt increase over the last quarter. Vishwanath Nair has pulled out some charts that explain this report in more detail. Vishi, the floor is yours.
Right, thank you so much. So what we can gather from this chart is evidently between the second quarter of FY18 and the third quarter of FY18, there has been an increase. If you can see in the companies which share of stress debt in the companies wherein the ICR or the interest coverage ratio is less than 1. Typically, when the interest coverage ratio is between 1 and 1.5, it is considered that the company is stable. Anything lower is considered a company in stress. So clearly, the level of stress debt in these companies has been going up. It was 38% in the second quarter. That has gone up to about 39%. That's what the Credit Suisse report shows. Now, according to the report, a lot of this stress is actually coming in from specifically 2 sectors. But before we get on to which 2 sectors they are, let's look at what exactly the interest coverage ratio picture is looking like for the entire segment. Now, earlier in your introduction, you talked about how the earnings for Indian corporates has been improving, and that can be very clearly seen in this chart as well, because the interest coverage ratio for the entire sector, for the entire corporate sector, has been on an uptrend, and that has improved to about 2.2%. So that is clearly an improvement on that part. But talking about the stress specifically, stress is emanating from 2 particular sectors, that is power and telecom. According to the report, there has been an improvement in metal companies, which were earlier the reason for a lot of the stress on the bank books and in the corporate sector. But after that improvement has taken place, a new set of stress assets have come up. According to the report, it says that the power sector's stress is not yet fully acknowledged by a lot of the lenders and the companies themselves. Also, the second sector that is important to look at is also telecom. About 55% of the telecom debt is still with firms which have an ICR ICR of less than 1, that is all stressed companies. If you just look at what has happened on the IBC front, now that is also an important development as far as the corporate sector goes. In IBC, between September 2017 and December 2017, just one quarter, over 100 cases have been referred to the Insolvency and Bankruptcy Court. This sort of shows that creditors are finally getting more confident with the IBC and therefore are pushing cases there. But just because there has been an improvement in the number of cases that are being referred does not mean that more resolution is happening. In the next chart, you will see that the resolution part actually is very small. If you look at here, the approval and resolution plan that have been implemented in various companies is only about 13%. About 38%, that's a large chunk of companies, are going into liquidation, while about 49% are still under appeal and review. So it's clear that while IBC is still sort of gaining more momentum, it is still far from actually showing large amounts of resolution in these companies.
Fair. Very interesting picture that you're pointing out there, and we'll have to see how that pans out. Thanks so much for that, Vishy. Now, moving on to the next story that we have for you. After losing their hold on Religare, Malvinder and Shivinder Singh may now be losing control of their hospital chain, Fortis Healthcare, as well. The Singh brothers' stake in Fortis has fallen to less than 9% after lenders claimed shares put up as collateral. Ari Alstead of Bloomberg News gets us all the details in this report.
Questions are growing about just who's in charge at Fortis Healthcare after the shareholding of Malvinder and Shivinder Singh, who built the company in India's second largest private hospital chain, fell precipitously last week from 34% to just under 9%. The reason for the steep drop is the Singhs had put up the majority of their shares as collateral, and last week their lenders started calling that collateral in. That's put about 25% of Fortis' shares outstanding in play and led to wild swings in the company's stock price as investors speculate about just who's going to step in. What's clear is that the Singhs' role at Fortis is diminishing. They've already stepped down from the company's board after Bloomberg reported they'd taken about $5 billion from the company a year ago. Whatever the swings, over the last 3 days, Fortis has ended trading up.
Now on to the big deal that we've been talking about since this morning. After establishing his leadership in the oil and gas industry and disrupting the telecom market, Mukesh Ambani is now expanding his media empire. Reliance Industries has announced the acquisition of almost 5% stake in Eros International PLC. RIL's media and entertainment arm and Eros in India will jointly produce and consolidate content across the country. Somit Sarkar gets us all the contours of the deal in this report.
Now, Reliance Industries will be investing close to 48.75 million in Eros PLC, that is the US listed entity, that is close to 325 crore rupees. Apart from that, they'll be also putting in 500 crore rupees in a corpus, that is close to 75 million US dollars. So for this 325 crore rupees, that is 48.75 million US dollars, they'll be subscribing for close to 32.5 lakh equity shares at $15 per share. Now this price is at a premium of 18% to Friday's closing price. Now this deal will require different regulatory approvals, including that of RBI, and it is expected to complete in the next 3 months. Now, apart from this 325 crore rupees, they'll be putting in 500 crore rupees in a corpus which will be used by the company to produce and acquire Indian films and digital contents across all languages. Now, this is Reliance Industries' third investment in media industry. Now in 2014 they had put in close to 4,000 crore rupees to acquire Network 18. Recently in the last 7 months they had put in 413 crore to acquire 24.9% stake in Balaji Telefilms, and now they have invested close to 825 crore rupees with Eros Group, and also they have appointed a new head to manage these investments. So Jyoti Deshpande, who was working with Eros for the last 17 years, will be moving on to Reliance Industries and head their media and industry business going from financial year 2019.
So what will Eros International India, the Indian listed entity, get from the deal? Well, Somit Sarkar broke down those details as well. Take a look.
Eros International Media, that is the Indian listed entity, will not be getting anything, at least in monetary terms. So it will be the Eros PLC that will receive the money, and that they might invest in India business, because they also need to put in the 500 crore rupees in the corpus, which will then become the 1,000 crore rupees corpus, which will be invested in Indian films and digital contents by this company. So let's see what Eros has to offer to Reliance Jio. Now they have more than 2,000 films in their library. Along with that, they also have rights of more than 10,000 movies. Also, they have upcoming 35 movies lined up over FY 18 to 20. So this is what Reliance Jio might get from Eros. So let's see what analysts are saying. Now, analysts are saying that this deal will strengthen Reliance Industries' digital content and entertainment offering. Along with that, it will, as Eros has a good presence in international market and the distribution, that will also aid Reliance Industries, Reliance Jio, because of the distribution and the presence that they have in the international market. We actually also spoke to Jyoti Deshpande. So let's hear what she has to say on her new position in Reliance Industries that she will be taking in FY 2019, and how they will be funding this deal for Eros International Media.
It's less about the money and more about signaling a partnership. Eros International PLC already has about $140 million on its balance sheet. At the India level, what we're doing is setting up a joint venture company for content consolidation. RIL has signaled its plans to enter media and entertainment in a big way. So tying up with content partners such as Eros is part of their strategy, and it's our absolute privilege to be part of this partnership. So each party will contribute 500 crores each, and we will make films in Hindi, in regional languages. We'll make original content programming for digital, and do all kinds of content creative partnerships to try and consolidate the fragmented industry today and grow it to a much larger size. The mechanism of India funding was always that the parent will give film advances to India. India will export overseas rights and worldwide digital rights to the parent, because Eros now is housed outside of India. ASAP, we're raring to go, so we'll get this on the ground as soon as possible. We've already, the calls have started coming in. Talent wants to work with both companies, so it's a win-win, and we'll announce the first few deals of this partnership very, very soon. Effectively, our net debt is very less. We've got already enough cash on our balance sheet. We did a round of financing in December, which we announced. So in just as late as December, we did a $100 million convertible bond at the PLC level. So we have, like I said, in excess of $140 million already. We're comfortable with our debt position. We had repaid some of the RCF already. We have about $90 million of debt at the India level, which is not very high. We have additional headroom of undrawn facilities at the India level as well. So this is so we're going to invest in growth for the next couple of years.
Well, the Reserve Bank of India needs to undertake an operational risk audit of Indian banks to protect the system against frauds. That's the word coming in from former Deputy Governor H.R. Khan, and that's what he recommends. In a conversation with Bloomberg Quint earlier today, he said the RBI must check if its instructions have been properly followed. Listen in.
One doesn't doubt the robustness of the system, but the peripheral connectivity of the other systems and whether there can be misuse of that, I think there is need for a global surveillance sort of thing, because SWIFT is also subject to surveillance by some of the regulators. And there is a supervisory college which looks into how the system SWIFT is regulated. I think they should also look at how the system, how robust and effective is the SWIFT system. I think that should also be looked at.
Sure. So the other thing that they said as part of yesterday's press release is that they've set up a committee to look at asset classification divergences, provisioning in the credit portfolio of banks, and rising instance of fraud. Sir, is this an accounting issue to your mind? Is that why they have set up?
I was a bit confused because here the issue was operation risk.
Exactly.
So this committee, but that said, the divergence is a major issue which has been coming for the last 2-3 years because of a variety of reasons. And very important reasons are that perhaps the auditors and RBI are not on the same page, and there need to be some bridge building between the perception of auditing community and the regulator. And there have been some perception that the regulator also has been changing the norms or reinterpreting the norms. I think that perception needs to be removed. I think this is a very welcome step so far as the divergence part is concerned. And you know, Mr. Malegaon is such a person with experience and expertise. He will bring a lot of value and a lot of pragmatic suggestions. I think that's a good step. But I would say they are also possibly looking at the incidence of frauds, which is the other part of the committee. I don't know the full details of the terms of reference, but I would say in the meantime, just like we did asset quality review in main bank, we should do operation risk audit of most banks and give the information to this committee to further strengthen. In a sort of in a mission-like mode, we should do the operation risk audit of all the banks. And a template should be created to see whether RBI instructions have been properly followed, what is the system of follow-up of instructions. There is a committee of the board which looks at internal control and frauds. How effective are those committees? There is a central fraud registry system and fraud reporting system, red flagging of system, whether those systems are effectively functioning. And the IT systems, how they are integrated or not integrated, and what are the controls, including compensatory controls. There are other systems which are not also integrated to CVS. So how those controls are put in place to see that such things don't happen. So I would in sum, I would recommend a quick time-bound operation risk audit of all the banks.
Well, commercial vehicle sales have been gathering momentum these past few months, and while vehicle sales move towards multi-axle and higher tonnage trucks, a closer look at the breakup will show a sharp drop in bus sales. Krishanu Mukherjee gets all the details of that sudden decline in bus sales in this report.
There are two reasons that are being cited for this fall in bus sales through the ongoing fiscal. The first one is coming from experts is that now the state transport undertakings, they seem to be looking at a new model of inducting fleets, bus fleets, which is a contract-based model. It may be a time-bound contract or a kilometer-bound contract, kilometer-based contract rather. Now, this model does not seem to be ready yet. That is one of the reasons because of which STUs are not placing orders with automakers for buses. Now, the second reason may be an embarrassment for the government actually. Now, under the Smart Cities mission, there is no particular allocation for orders of buses as used to be the case with JNNURM, the previous scheme. And as a result, the city administrations, what we're getting to know from experts, have been focusing on other areas, maybe more long-term solutions such as road construction and other activities. But as a result, bus orders have been down.
Well, the centre today opposed a public interest litigation in the Supreme Court seeking an independent probe in the 11,000 crore rupee Punjab National Bank scam that's been discussed for some time. The government said that an FIR had already been lodged and the probe was on. Petitioners, however, insisted that the court admit their PIL. The court said that it would wait for the centre's investigation to conclude before issuing further directions on the matter. The court also said that the PIL seemed to have been filed on the basis of media reports and questioned whether the petition was publicity inspired before adjourning the matter to March 16th for the next hearing. Now, Tamil actor Kamal Haasan has decided to foray into politics. He will be unveiling his party symbol later this evening. Haasan started his political entry by visiting former President APJ Abdul Kalam's birthplace in the morning. He then addressed a rally alongside fishermen from Rameshwaram. His foray coincides with Rajnikant's decision to join politics, causing speculation that the two could join forces. But Kamal Haasan said that Talaivar's political bid had a hue of saffron. Well, Kamal Haasan may try to project himself as an alternative to the DMK, that is, Frontline's associate editor R.K. Radhakrishnan's take on Hassan's political entry. In a conversation with Bloomberg Quint earlier today, he said that both the DMK and AIDMK are jittery and are closely watching Kamal Haasan's moves. Listen.
Most certainly he is an atheist, so he's trying to draw upon the rationalist crowd in Tamil Nadu, which is not significant, but still that is the essential base of the DMK, which is about 24-26% of the voting population. I think he is trying to position himself as the alternative to the DMK. Maybe in the long run, may not be in the short run, but that seems to be what he's focusing on, while Rajini, on the other hand, is trying to position himself as the alternative to the AIADMK.
These are uncertain times in Tamil Nadu politics. How are the bigger players, the DMK and the ADMK, reacting to Kamal's and Rajini's entry?
No, it's very clear that both the ADMK and DMK are jittery. I mean, the earlier times, the DMK would respond to somebody who is starting a political party or even one of the small political parties when they put out a statement criticizing the DMK, they would get one of their small-time district secretaries or somebody to react. But this time, if we have seen the reaction from the DMK, it has been knee-jerk, so to speak. On January 23rd, you had Stalin saying something like, there are new birds in the horizon, but they can't take wings and stuff, referring to both Rajini and Kamal. And then again, you have, a state minister saying that these are all flash in the pan, they will not be able to achieve much. Again, yesterday you had Stalin criticizing Kamal Haasan, calling him a paper flower. Now, I mean, it shows that both DMK and ADMK are very jittery and very wary about what is going to happen. The fragmentation of polity and obviously will lead to the fragmentation of the voting of voters. So I think it is a huge worry for both of them, and both of them are trying to ramp up, their support base, and they have come up with certain plans which will be unveiled during the course of the week.
Meanwhile, DMK Member of Parliament TKS Elangovan says that their party is waiting for Hassan to spell out his policies first. Listen in.
Kamal Haasan is starting a party, we cannot stop him. What we will do is, after starting his party, we will look into his principles. What is his ideology? If his ideology is opposed to us, we will oppose.
Well, in international news, British Prime Minister Theresa May is facing opposition from 62 members of her own party. These members are demanding a quick, clean break from the European Union as she tries to finalize her Brexit plans. The lawmakers have asked May to revise the plan or nature for the post-Brexit transition period. In the US, President Donald Trump today ordered a ban on gun accessories known as bump stocks. These bump stocks allow semi-automatic rifles to be fired more rapidly. This is the Trump administration's first concrete measure in response to the Florida school shooting last week. Remember, Trump had signed a memorandum that aims at prohibiting all devices that turn illegal weapons into machine guns. Apple is in talks to buy long-term supplies of cobalt directly from miners for the first time. According to Bloomberg reports, the move seeks to ensure that Apple will have enough of the key battery ingredient. This comes at a time when the electric vehicles boom is expected to fuel a shortage of cobalt. Sources indicate that Apple is eyeing contracts to secure several thousand metric tons of cobalt a year for 5 years or longer. Apple, however, has declined to comment on the issue. Well, the buying and selling of football players is making headlines for the astronomical amounts that are being paid. Ever wondered what Lionel Messi would be sold for? Well, you'll probably not find out, because FC Barcelona President Josep Bartomeu says that they will not sell their star player at any cost. He further states that the buyout clause doesn't matter, as the 5-time Ballon d'Or award winner wants to stay at Barcelona. Listen in.
No, we don't want to sell Leo Messi for
not even if it's secured the future of the club for decades to come.
No, of course not. Leo Messi, we are a club that we want to have good football. You know, we like to practice this unique way of football that we do and we play. And Leo Messi is our key player. But the more important is that Leo Messi doesn't want to leave Barcelona. That's the more important. He likes the city. His club. He came from Argentina when he was 12 years old, but the important is you can have as many buying clauses as possible, but if a player doesn't want to leave, like Lionel Messi, he'll stay forever.
Well, fans of other football clubs who want Lionel Messi will only have to transfer him on FIFA maybe or PES. With that, it's a wrap on this edition of What Did You Miss? Hopefully, we helped you catch up with some of the things that you missed over the course of the day. But there's lots more coming up for the rest of the evening. Do stay tuned. This is Bloomberg Quint.